April 2nd, 2024. Today we had a big gap down and a bear bar on bar one. Generally something like this, when you get a big gap down, the odds of a trend day are increased a little bit, and the odds of the trend day being a bear trend day are a bit higher than the odds of the trend day being a bull trend day. So, there's still an 80% chance you're going to get some sort of minor reversal on the open, but you might end up getting follow through here. And I think if you're selling, selling below bar one and closing your eyes and just walking away for a bit, maybe 30% chance that you've seen the high of the day at that point, and you might get some. It doesn't necessarily mean you're going to get a bear trend day. This could have just gone sideways and we closed. Pretend this didn't happen and this failed and we just went sideways. Here, then that would still be the high of the day. So it doesn't necessarily mean you're going to get a big bear trend day, but I would say generally once bar one closes, about a 30% chance you've seen the high of the day. Good follow through on bar two. It's sell to close, so bears can sell, but I don't really know if I want to be selling. I generally don't trade the first 5 or 6 bars of the day because I just like to let a couple of bars form to get some information. But it's okay to sell the close of two. But it's probably, it's probably more of a scalp, I would suppose, because there's still an 80% chance you're going to get a minor reversal on the open. So the odds that we just keep printing big bear bars are pretty low. Additionally, look how far away from the moving average we are. We probably have to get a lot closer to the moving average. And we can do that by going sideways like we did, but it's hard not to get squeezed out if we're going to go sideways. So if you're selling here, you're hoping for some sort of vacuum test down, and obviously you don't really end up getting it. So somewhat disappointing follow through on bar three, a doji bar. Some bears might start looking to exit a point or two above the bar, but still okay to be short. Bear bar four, it's possibly a 1 bar final flag and maybe a second leg trap. 1 to the low of 3 is down, is like 1, and then a pullback to the close of 3, bar 2, and then pull back to the close of 3, and then second leg down, bar 4. So do you sell 4? I wouldn't. I would just be flat at this point probably. Or, you could be short taking a chance, but I would just rather be flat. And then you get a disappointment bar on bar 5. 5 is a lower low double bottom with 3. I probably would not buy above 5. It's probably a minor reversal, and you need a good follow through. Good bull bar on bar 6, but after 1 through 4, I'm thinking we're probably going to get a lower high. It's a consecutive bull bars, but there's big tails on the bottom. So probably, not going too much higher. We do keep testing down, and you don't want to see bars like 6. You want to see, bars like 21. If you're going to be buying down here, you want to see big bull bars closing on their highs instead of bars with big tails. Instead, you get another big tail on bar 7. So 5, 6, and 7, huge tails. You can see bulls willing to buy below bar 6 because it's a bad low 1, but not as willing to buy above bar 6. I'm actually curious. So 950 to 10 o'clock. So with all these tails, what's actually happening on a lower time frame, right? What is this actually doing? 950, and then through 10:05. So 10 o'clock, 10:05, and you can see, what did it form? It's forming a wedge, right? So when you're getting these bars with these huge tails on the bottom in here, and you have 3 big tails, you're actually forming a pair. I don't think it was a parabolic wedge, but it was a wedge on a lower time frame. So that's what was actually happening there. So not as good to be buying, above 6, trying to buy above 7 or buy the close 7, because you're buying the top of a wedge and you're betting on a breakout above that wedge if you're buying there. Additionally, we might still get a lower high from 1 through 4. So it's hard to want to be short up here or to be long up here. Big bear surprise bar on 8. It's a double top with 1 lower high. You can probably sell below 8. It's enough of a surprise bar that we should at least get a second leg down, and we might get some sort of follow through. But you look at the tail on 3 and the tail on 5, we might start getting a third leg here and then form some sort of wedge. But I still think 8 is a totally reasonable sell, always in short, back to clearly always in short and looking for follow through. You do get follow through on 9, but tail on the bottom, it's okay, and it's definitely still okay to be short, but you can see 3, 7, 9, so potential wedge forming here. Some traders, I don't know if they were able to make 5 points. Let's see. They were. So bears who sold below 8 were able to make 5 points if they wanted to just scalp out and take that, but you get follow through on 9. What about 10? It's a bull bar, not quite closing near its high. I think we're probably going to get back up into this area at some point, because while it wasn't a good buy above 7, I think, or by the close of 7, it was, in theory, reasonable to do something like that. And which means, generally 60% chance we're going to get back to this close, and 80% chance we're going to get to the midpoint, which you can see we did on the next bar. If you bought above 10, we got to the midpoint of those 2 buys. So I don't necessarily know if we're going to get all the way back to the 7 close immediately, because 8 and 9 are pretty strong and strong enough for a second leg sideways to down. But the 8 high is also a magnet because it's the top of the most recent sell climax. So we might get there. Follow through for the bulls on bar 11. Good follow through, but a tail on the top, so not really as good as it could be. Again, what's your goal if you're long right now? You have to be long for a swing. You know that the odds that we just rally straight up and blow through all the magnets are very low. It's probably a trading range day. So I don't really think we're going to do that. But still okay to be long. Just you can't be surprised when you see 12 is my point. If you bought here and you got this as follow through, you can't really be all that stunned when you see 12, and probably not the best to exit below 12. About 60% of the time on the open, when you get the opening swing, which I suppose would have been this today, the market will, try to do something to trap traders out. And today that thing was bar 12. It tried to trap the bulls out. 13, bad follow through for 12. This could be some sort of attempt at a second leg from 8 and 9. And then a rally on 14. It triggers the high one above 13. It's probably still okay to be long, but this isn't the best high one, obviously. 15, follow through, but you find sellers above 14, sellers above 11 and 12. Traders selling the breakout, betting it's going to fail. And then a disappointing bar on 16 closing near its low. 15 was the low too short, and 16 is the entry bar, so it's not. I don't think it's ideal for the bears. I wanted 16 to close on its low. I think if 16 closes on its low, it's a more reasonable short, but it doesn't, so not all that great. For magnets today, by the way, I thought this low was going to be a magnet, since that was the neckline of the double top on the daily chart. You can see right here. We got really close to it. We did not quite touch it, but that was the magnet. At least I didn't think we touched it. 62.5, 63. So yeah, we came within 2 ticks of it at the end of the day, but that rally at the end of the day was trying to test the neckline of this double top. And the neckline is just the lowest point in between the two pieces of the double top. So part of the double top, part of the double top. The lowest point is the neckline. Another example of something like that, you could argue 20 is a higher low double bottom with 10, and the neckline would be 15 because that's the highest point between the double bottom. So 16, a bear bar closing somewhat near its low, but I think it needs to be stronger. And 17, a doji bar. Really not all that great to be selling down here. I think that probably buyers somewhere below 17, scaling in lower, knowing we're going to get back to that low. 18, you could argue higher low double bottom with 10, so same kind of deal, but really not all that great. It's a bear bar, so you want to see a good bull bar closing near its high on 19, and instead you get a disappointing doji bar. So really not all that awesome. 20, bull bar closing near its high. It's bears. I think this is more bears giving up. I'm not sure bulls are super eager about buying in here, but if you're selling down here, you're pretty impatient with this trade. I don't think you can sell down here and just hope that we're going to start selling off. When you're taking a sell like 16, or if you did, I don't know how people get short down here, but if you did get short down here, let's say you took the low too short below 15, it's a low probability trade, and it's not really all that great. So when you start to go sideways, those traders are at some point going to get impatient and just exit. If you're taking a low probability trade, they want it to go rather quickly. If you're sold below 15, 16 was okay, but you wanted to see 17 look like 8. You wanted to see a big follow through bar. Instead, you get a doji, and then another disappointing bar, and then you get 19. It's another disappointing bar. And bears, at a certain point, they're just going to be like, this is not worth being short anymore. I'm done with this trade, and they'll buy back their shorts, and that causes 20. And any bears who still are short, they're going to see 20, follow through for this double bottom. It's not great, but it is follow through. And they're going to see 20, and they're going to say, well, I don't want to be a part of this trade either now. We got a bull bar closing near its high. Think of it if you had sold for any reason. If you're short for any reason and you see 20, you're thinking, oh, that's not what I wanted. And so those traders give up, and that's what causes the bull bar 21. 21, a good bull bar closing near its high. It's an okay buy. I think, you're buying, hoping we get a breakout above the moving average and a breakout to the upside of the 18 bar range. 90% chance we're going to get a breakout of the 18 bar range. You could also argue this was a breakout of a triangle. We had a triangle here. 21 breaks out of it. Follow through on 22, good for the bulls, but a smaller bar and closing right near the moving average, so probably not as good as it could be. 23, a bear bar closing near its low. It's potentially a wedge, 11, 15, and 22, but I don't really want to sell below 23 after this kind of buy climax. It's potentially a lower high double top too with bar 8, but not really all that great. And then you get a bull bar closing kind of near its high 24, but it's more of a doji bar. I don't want to buy 24 because you're buying kind of near the moving average, and you're buying 11 after 11, 15, 22, so it's a lower probability trade when you just got a wedge, and wedges generally get at least 2 legs sideways to down. So I'm expecting another leg sideways to down. 24, it's one of those trades where, you might win occasionally. You're buying 24, you're only risking like 2 points. So it's probably fine to just buy 24, put a stop below 24 and, close your eyes. It's more of a YOLO trade, so to speak, and just close your eyes. And, even if you get to a new high, you're making, you know, 8 points when you're risking, 2. So, or 2.5 or 2.25. So, you can probably do it, but I just would rather wait for another leg sideways to down. Or if 25 is a good bull bar closing near its high, you can buy that. And you can see you get disappointment on 25 when, the bulls who bought this close, they're not really thrilled with this. So maybe they scaled it lower and they're exiting up here. 26, an outside down bar closing near its low. You can probably sell 26 because we haven't had to close below the moving average yet. And it's a lower high. We've had consistent lower highs here. And, I think it's a double top. So I think it's probably fine, but it could be a second leg trap and we could easily get a bull bar closing near its high. I think rather than selling 26, especially with how good the SPY climax was, it probably still has some influence. So we should find buyers down here. You can see we do end up finding buyers at the bottom of the buy climax, the same way we started to find sellers towards the top of the sell climax. So it's probably an okay swing sell, but I would rather wait for follow through. And you get a doji bars follow through on 27. What did bears do? They sold the 50% correction instead of selling directly below 26. 28, a bear bar closing near its low. I think okay to be short. At this point, you have a couple of bear bars. We're probably pretty clearly always in short at this point. And it's better to just, I think it's definitely okay to be short here, decently below the moving average. Follow through 29, okay to be short still. And we end up getting a deep pullback on 30. Might have been around a 50% correction. Roughly a 50% correction of the bear move. Traders in trading ranges like to sell 50% corrections, but still always in short, still okay to be short. 30, about 90 seconds into the bar was on its high, and, it's 5-minute bars. So do you think the bar is going to race all the way up here? Probably not. So some traders, they saw the bar up here around 50%. It was also testing the 26 low. So it's around 50% and testing the 26 low. The 26 low is a swing point. I actually want to make a video on how swing points become magnets, but I'll do that some other time. I'm pretty tired right now. You can tell I can tell I'm stumbling over my words a lot. So I apologize if I'm a little disoriented for this video. But about 90 seconds into this bar, it was on its high and it's got 3.5 minutes left and it's probably not going to keep growing. So a lot of traders just sold the market when it was there around this low, and you can see it ended up selling off. And when we got to the 29 low, traders ended up, instead of selling more, they exited, and that caused 31. I think bears will exit above 31. And you get kind of a disappointing bar 32. I don't want to buy above here. It's too tight of a channel down. And, this is why stop orders, a lot of times tight stops are counterintuitive on trading range days, because you're going to buy above here, it's going to stop you out and then go where you want it to. So if you're buying above here, you probably have to have a wide stop and be buying more down here, betting that you're not going to get a big bear bar closing near its low. So 33, probably more buyers below 31. I think in stop order, in trading ranges, a lot of times the stop orders where you're kind of, thinking about it and you're like, I don't know, maybe, a lot of times when you're thinking that, like 31, you're like, maybe, I'm not sure. Probably just makes more sense to buy below the bar than above it. And if it races up anyways, just let it go. 34, an inside bar, double bottom, really not all that great though. You can see we're consistently getting higher lows though, which is good for the bulls, but could be some sort of triangle as well. 35, a bull bar, but a tail on the top, and then a breakout through the moving average on 36. Do you buy above 36? I would probably rather not. It's the first close above the moving average all day, but it's a good enough bull bar that we might end up getting the upside breakout. So I think if the bulls get follow through from 36, you can buy, and you can see at 37, it's a doji bar, but it has a bull close, so it's bull follow through. So I think okay to buy above 37, or, you're buying at the same price. You're essentially still buying above 36, but you have follow through. More follow through on 38, and disappointment for the bulls on 39. But look at 39, following 1, 2, 3, 4, 5 straight bull bars, we could easily get an upside breakout here. So bulls buy the close of 39 instead of selling, and you can see we never triggered the sell below 39. Huge bull bar on 40. Not really how healthy trends act. Generally, a healthy trend will, produce bars like smaller bars. Like, if 36 was the breakout bar, we want to see bars that are consistently the size of 36. So really not a very healthy looking bar on 40. Might get some profit taking, but we could still easily get another leg up. 41, an inside bar, a high one, but a bear bar. So really not all that great to be buying above, but still okay to be long. Follow through 42, 43, and then disappointment 44. It's still a wedge, a bigger wedge, 15, you could use whatever 11. I would personally look at it as 15, 26, and 43. So when you get disappointment 44, bulls are going to exit below 44. And where do you think we're going? You know, what am I saying? What have I been saying? The most recent buy climax low, sell climax high. So this is the most recent buy climax. We're probably going to the low. And that's exactly where we went. Follow through 45. You know, I don't know. Maybe always in traders can sell 45, but I think that this is a pretty tight channel. And so any reversal down is probably going to be minor. If you're selling, you know, we're probably going to find buyers here. So it's kind of tough. And I think the same problem with 46, big tail overlapping 45, and you're selling right into support when you have a pretty tight channel up. And, you know, maybe around the 50% pullback as well. Yeah, you're selling right on the 50% pullback. So probably not as great as it could be. 47, a bull bar, high one, but not all that great after 3 straight bear bars. Bad follow through on 48. 49, a low one, but, you know, I think we need a deeper pullback. You know, we're probably going to need to do more sideways trading before we get a downside breakout after this tight channel. This to me looks like it's going to form some sort of second leg trap. If we get a couple more bear bars, I'll start to believe in the bears, but there's not really a rush to get short. I think if we're going to get a downside breakout, you know, you have a lot of time. So I don't think it's all that great. Disappointment 50, and those traders exit causing 51. 51's a high too, but really not all that good. You're buying on a flat moving average, so I'd rather wait. And 52 is not, you know, 52 is deceitful. Some bulls kind of will look at 52 and say, well, I didn't want to buy 51, but now we have good follow through, so I'll buy 52. But I really don't think it's all that good. The bulls who bought below 43 and scaled in lower are obviously disappointed in how this went. And so they're looking to exit. And you can see that's why we touched the 43 low and then sold off, because those traders who bought that low are disappointed and they're using this rally to exit. So 52, and you know, additionally, where swing points get tested in trading ranges. It's interesting that we didn't test this trading range or this swing point 51 high, which is actually a hint. You know, the fact that bulls were able to keep that breakout gap open with the 51 high is a hint that we were actually going to rally instead of sell off for this. So that's a little subtle thing that if you notice that bulls were able to keep that open, it gives them a slight advantage. But I don't think it's all that great to buy above 52 because it's most likely that we're going to test this. And if 53 is a good bull bar, then you buy, but we didn't really get it. So inside bar 53, or not, sorry, not inside bar, but essentially a low one, short 53, just sideways. 54, the bulls who bought here. You can see, what did I want? What did you want the bulls to do? You wanted the bulls who bought here. They might have been disappointed in this, but you wanted them to overall be confident that we were going up and continue to buy. So you wanted to see 54 close above the 52 high to show that those bulls who bought here, they were disappointed, sure, but they said, no, I'm correct. I'm going to keep buying. And, you know, basically get a lot of other bulls into the market. But instead, we got disappointment and sellers. Same thing here. If we had closed 52 above the 43 low, it would have been a bit more likely that we were going to rally because the bulls who didn't sell out here, they bought instead. So, but instead we found sellers here. We found sellers here. Sideways, 56, a bull bar, but didn't close on its high. I'd rather wait, not quite able to break out. 57, disappointment. 58, a bull bar closing near its high. 58 is kind of a confusing bar. I think you can probably buy it for a swing. But the problem is, maybe this wedge, 1, 2, 3, maybe 4, maybe some sort of truncated wedge and a nested wedge, 1, 2, 3. So I think that we're probably going to continue more sideways. It's also a tight trading range, but I don't actually think it's the worst thing in the world to buy above 58, but maybe I'm wrong. Outside down 59, and you can see the bulls who bought above 58, disappointed 59, exit 60. 61, we tried to rally, but unable. Tail on top, and bulls exit 62. Another rally attempt 63, but not that good. And then an attempt at a downside breakout 64. This is just an expanding triangle you can see here and here. An inside bar 65. Failed breakout below the low 166. None of this is that good. Obviously 54 to 66. Tight trading range. Don't do anything. Big bull bar closing near its high, 67, closing above the breakout points, which is really good. We still haven't broken out of the 18 bar range yet, so pretty likely that we're going to end up getting a breakout of the 18 bar range, and it could be to the upside. Probably will be to the upside at this point. And you can see we get the breakout on 68, but a huge tail on the top, can't close above, very disappointing. And so instead of buying more, bulls exit, and that causes the big bear bar closing near its low 69. But I wouldn't sell 69, 67, 68 is too strong. I'd wait to see if 70 is another big bear bar, and then you can sell that. And instead, you get this, which is really not what you want. Big bull bar 71, closing near its high. It's back to, always in long. You can probably buy above 71 or wait for follow through. Kind of disappointing follow through on 72 and outside up 73. Okay to probably buy, close or buy above 73. You can see the 70 high. The bears who sold it got trapped. 71, 72, 73, and they were never let out. And we ended up getting follow through 74, 75, but not all that great. Outside up 76, and we just kind of drifted sideways to up into the close, trying to reach that magnet. For stop orders today, thought 8 was fine. 10's probably fine, but it's a swing and it's low probability. So, that's might be more of a Walmart trade. You buy, you put a stop here, you take profit up here, trying to get, I don't know, you're risking 5 points, trying to make 15, 3-1. Pretty reasonable to probably do that and just leave it alone. 21's probably fine, but you got to get out here. You can't buy 21 and just put a stop all the way down here and sit through this. So if you're going to buy 21, you just get out below this and you take, your small loss. It's okay to take that trade, but I don't think you can sit through this. This particular time, if you bought here, you put a stop here and you walked away, you would have been fine. But I think a lot of times you're going to do that. You're going to get stopped out and then it'll reverse. So not that good. 36, 37, those are good buys. Still always in long, maybe 42, but I think all the bulls are going to get out below 44, and that's causing 45. You could maybe sell these, but I don't think they're that great. I wouldn't buy 52. I don't know, maybe 58, but you can't have a wide stop. You probably just got to do it, and then you get disappointed, you get out. If you're buying 58, you're hoping for a quick upside breakout. 67's fine. 71 fine, 72, those are all fine, I think. So on the daily chart, we essentially have big high 2, high 1, pullback high 2. So it's a high 2 at the moving average. And, what have we done? With moving average pullbacks for the past, I don't know, since like here, basically the past 100 plus days, every time we get one or 100 plus bars, moving average pullback, bounce, moving average pullback, bounce, moving average pullback, bounce, bounce. And then it's the first one in a while. So we might get a bounce tomorrow. It's very possible. And if we don't get a bounce and we go sideways to down and go, through the moving average and start testing the bottom, because this was a buy climax, right? So if we test the bottom of the buy climax, I would expect buyers to be around 5,200 easily. If I don't know, we probably won't even get there, but if we do get to 5,200, definitely buyers, just below the moving average. You can see we didn't quite touch it, so we might have to touch the moving average at some point. But if there's not buyers above tomorrow, there'll probably be buyers below, scaling and lower. And yeah,